What's going on, guys? It's Sunny Chopper Trading, and in this video we're going to be going over what actually moves markets. So before we get started, be sure to join the free Facebook group. You can stay up to date on the latest analysis that I'm going to be doing, get one-on-one advice from me, get access to the Starter Trade Accelerator course. All of this for free. Link in the description. Moving on. So let's discuss about what doesn't move the markets. Indicators don't move the markets. I'm sorry. Oscillators, RSI, stochastics, all that stuff, nope, doesn't move them. Chart patterns, not at all. Candlesticks, nope. These are all simply tools to help lower the odds of you making a mistake when you're predicting where the market might go, but they're not actually what's moving the markets. So let's start with an example. Say I offered you and everyone around you an iPhone 10 for just $10. Let's assume that you like iPhones and you really just want it. And let's just not say that you're an Android person and you don't want the iPhone. Let's assume that you like iPhones. So someone else is really gonna want it because it's only $10 and it's a new phone, top of the line. So what's gonna happen is they're gonna come to me and tell me that they want to buy it for $11 and just sell it to them. Why should I sell it to you if you're buying it for $10 and they're willing to buy it for 11? And then you'll interject and tell me that you want to buy it for $12 because you still think that $12 is cheap for an iPhone 10. So when you keep doing this, prices are going to keep going up and up and up until the whole market believes that the iPhone 10 is now overpriced. For example, if prices keep going up and up and up and they reach about like $1,300, people are going to be like, I'm not sure if I want to buy this anymore. And then this is why you can start, penny auctions on eBay and still sell at a good price because you'll eventually get to where the market decides, hey, this is a good price. So it works the other way around as well. So what do I mean? Say I offered the market iPhone 5 for 750. So like no one's even gonna buy this, right? No one's gonna want to buy it. It's so expensive. It's such an old phone. Why would I pay that much for it? You know. So I would have to lower the price of my iPhone 5 in order to sell it. So when I reach around $150, people are gonna start to buy it, and my price will start to stabilize there. So let's apply this model of the iPhones to the markets. So Forex are global markets, and even the slightest uptick or downtick, can generate or lose a company a lot of revenue if they're importing and exporting goods. For example, Alibaba, AliExpress, um, who else? International companies, Apple, Ford, car companies. These guys are uh, sending and importing stuff all the time. So they have something with their currencies going on too. So banks too. They you know if a bank holds one currency and keeps holding on to that currency, and let's just say, um, for God forbid, the U.S. dollar like just completely tanks, just is gone by tomorrow. Any bank that is only holding U.S. dollars, that bank is in a lot of trouble right now. So they have to trade the markets as well, so they can mitigate the risk of hey, if our currency goes to crap, we don't go to crap. So when a currency is undervalued, it's the same thing as a $10 iPhone 10. Prices are low. People want to buy it, so prices are going to go up. So when a currency is overvalued, it's the same thing as a $750 iPhone 5. Nobody wants it. No one's going to get it. The market has to lower its price to sell it. So buy low, sell high. Supply and demand helps you make sure that you aren't buying high and selling low. Most beginner traders are making the mistake of doing this. They're buying too high, they buy into the hype, and then when the hype is over, then it starts to crash and they sell it too low, and then it doesn't work out so well. So you only buy when prices are low, and you only sell when prices are high. So you get quote unquote aligned with the big institutions and the banks that have the capital to move the market. The thing is, you just move with them. And thank you for watching. Subscribe for more helpful trading tips.